afternoon, everybody, and welcome to episode 6 of the Blue Sky Business Acquisitions podcast. You sold a business. Now, what do you do with that money? Today, we are absolutely blessed to have Ruben and Joe on from Strategic Wealth Partners, and they are wealth advisors here in the state of Wisconsin. Strategic Wealth Partners is an independent wealth management firm that manages complexity and delivers simplicity. Their objective is to provide you with a successful wealth strategy, independent advice, and personalized services that you deserve. Sellers, let me tell you one thing. When you sell a business, you spent 30 years, 35 years in that business. What do you do with the money when you earn it? When you sell that business and you get that 1, 2, 3, 10, $20 million, who do you go to? Well, I think we got the people here for you. Ruben, Joe, thanks so much for your time today. Thanks so much for your sponsorship. Could you take a few minutes to let our listeners know who you are, kind of what you guys do, and then let's start in on this.
Yeah, absolutely, Matt, Tom, Ben, thanks so much for having us and for thinking of us when you guys had the initial idea of starting a podcast and trying to inform and educate your clients on what it takes to buy, sell a business, right? And what you do with your money always matters, right? We like to think so. We're in that business, but especially when you've built something over the course of a lifetime, or it's a generational business, right? That you've worked on and locked up with a family member, and now you need liquidity, right? Maybe now you need a chance to live off the spoils of that good fortune and that hard work, and so that's where we see ourselves. And so, by introduction, my name is Ruben Rivas. I'm a wealth advisor at Strategic Wealth Partners, like you guys had said. And, our goal and our objective really is to build trusted relationships with people, right? To the point that, we're inviting you to our house for Thanksgiving dinner, or we're taking you out to play around and golf. But we're really integral in kind of guiding you through those next steps in life, right? You've decided to retire, right? Now what? How do I afford that, and how do I pass it on to the next generation? So Joe and I partner together with clients to do just that. But enough about me. Joe, take it away.
Yeah, so thanks for having us here. So I think this is a really important topic to make sure we cover with business owners. It's not always top of mind. But I'm Joe Thompson. So I've been with Strategic Wealth Partners 6 years, and I was on the broker-dealer network with CEPA about 5 years prior to that. So 10 years in the business. I'm a certified exit planning advisor, and I'm also an IRS enrolled agent. So I come in on the technical side mostly to help business owners navigate a lot of what we'll be talking about today, and making sure that they have a good team around them, giving them good advice, like the people on the call, Ben, Matt, and Tom. So really bring more of a technical aspect to it, and making sure that business owners understand their options, what exit really looks like, because as we'll kind of talk through, a lot of it is, reality is different than what they think going into it. And it's really important to have an advocate wealth advisor on the team, along with the rest of the people helping you make educated decisions.
Super excited to have you guys on the podcast, and super excited for the conversation today. So with that, I think, go into your process as far as financial planning, and any insights that you think will be beneficial to our listeners.
Yeah, absolutely. I think it takes, like Joe mentioned, kind of a technical expertise and an analytical curiosity to really service clients in the right way, right? It's not just, hey, we really like the guys that manage our money. We have to be able to meet the mandate that is giving sound advice financially, right? And largely via how we invest, how we plan, right? So the process is creating a roadmap for you and your family via financial plan, right? And really what a financial plan is discovery, right? Not everybody understands their complete net worth. Fewer people to that extent understand their income and expense, right? What their cash flow is. The money that they have set aside in a retirement plan, a 401k, for example, how's that allocated from an investment perspective, right? What are your risks to your plan? Do you understand taxes? and how that affects your financial plan. What kind of taxable income does your portfolio put off or not, right? And we use those really kind of core pillars to help understand how you reach your goal, right? And those goals change for every single client. Some want to fund college because they're in their 30s and 40s and just starting their families, right? Others, like we said, are at the point where they are thinking of retiring. And even beyond that, right? Even later in life, how do we gift to family? How do we be charitable? How do we transfer this money, this windfall, free of estate taxes, right? Or any concerns that our net worth or money would be wrapped up in probate, right? So that's really what we think about when it comes to a financial plan. I started my career at a larger wirehouse. I went to a big bank, and it's been interesting to see the industry shift from the brokerage style of doing business, right? Where it was very transactional. I'd call you up and I'd have an idea for a stock and you'd buy its stock, and legislation changed some of that around the time that Joe and I got into the business about a decade ago. And so we went to this kind of fee for advice style of management, right? And what became apparently clear was that we were being regulated and told to manage the client in a best interest kind of way, right? And so that's what the financial plan does for us, is allows us to really put on that fiduciary hat securely, which means we're managing their property, their assets as if it were our own. Joe, anything else you can think of there along that front?
Yeah, I think it's really important to go back to financial planning and what it means. I think Ruben touched on a lot of the high level topics that you want to make sure you cover, but I think the term is thrown around all over the place, and a lot of firms don't do true financial planning. If you meet an advisor who leads with investments, it tells us that their focus is investments and they're not really looking at your full financial picture. And I think that a lot of people in the business world, either on the buy side or the sell side, need somebody with that background that's going to be able to help do that more customized planning. Business owners are relatively unique in the fact that often more than 80% of their net worth is in one asset. So they have unique planning challenges that really need to come into play. And you need to make sure that you're starting with that process. And if you don't, you're going to not get a good result. You don't want somebody who's going to be telling you to do certain investments when they haven't done the due diligence to know what is your business? How do you plan on exiting it? Is it a family business? Is it going to private equity? Have you done valuations? All this stuff that we'll talk about becomes really important in the planning process. You need to make sure you're working with somebody who does actual financial planning and somebody who goes through all of the check boxes and not the illusion of the check boxes, which is what a lot of people we've come across happen to run into more than not.
Wonderful. Guys, and just for quick clarification, I mean, you guys are all over. You service clients on a national basis, right?
We do. Yes.
We do. Yep.
Awesome. Wonderful.
Yeah.
And I cut you off, Ruben. So sorry.
No, I to that point, I was going to say, if you're in a warm weather state, yeah, we definitely like to visit those in the winter. Florida, California, Arizona, get a good workout. But I think what Joe said is spot on, right? I think that our industry throws it around a lot, right? But it's how you do it. And I think the other point is, because we have a niche in the business owner, both buyer and seller kind of things, our advice puts those business owners in the right camps, meaning we don't do business valuations, right? But we know people that do. Right. We're not an M&A attorney, but we know people that do. Right. So we need to be able to consult our clients on more than just what their take home is. Right. Let's say we're talking with a business owner 3 or 5 years before some sort of transaction. Right. And they've not engaged any sort of team other than us. Right. It's on us to bring those consultative kind of resources. And I think that's where Joe, being a certified exit planning advisor, has really helped shape our practice.
Wonderful. Over the course of the time, guys, you said, top 4 things that we find out when you run in financial plans. I think, Ruben, you've said this before to me, is, the left hand doesn't talk to the right hand. Can you explain to the listeners kind of what that statement means?
Yeah, absolutely. When we run a plan for a client, oftentimes they're surprised. And so, kind of the top four things that we see is that clients have saved, but they've saved all over the place, right? And that's kind of the leads into the left, right doesn't, the left hand doesn't talk to the right hand kind of thing, because, maybe they've had 3 or 4 different jobs over their career. They've used a target date fund in one. Maybe there was an investment guy that they met with, and they invested that, 401k or retirement plan. And then, they went off and started a business, and their accountant told them they should start a CEPA IRA, right, or a solo 401k. And they kind of bought and sell stocks that they heard about from friends at the country club, right, or other people and whatnot. And when they come to us and we start asking questions about kind of why, sometimes the answers aren't great, right? And so in that way, the left hand that's inclined to save a lot of money and think about the future doesn't talk to the right hand, which is the practicality of, does the investment allocation sync up to your goal, right? If we're talking about retirement assets, those are invested much differently than you would in a what we call qualified or non-qualified asset, right? Like a taxable investment account, right? Or some people just have money in the bank in a savings account, right? Well, they make interest on that. They pay taxes on that. And so why do you hold as much cash as you do? Why do you hold as much stock as you do? Why do you hold as much bonds as you do? And that's kind of the third point is oftentimes people hold too much money in cash and in bonds. Most people are overly conservative, especially in this area in Wisconsin, right? I think we're a fairly conservative state, a lot of quiet money. And then the final thing, which, I think always, maybe probably shouldn't, right? Because most people don't understand taxes, but, we start talking about taxes in the plan and, the eyes glaze over. And it's right away like, oh, yeah, whatever you guys think is best. And so those are kind of the 4 things that we discover. But yeah, the left and right hand thing, we see that all the time.
The other thing that I think's even, one step back from that is the thing that I find the most common is the business owner waited too long to engage a planning team. And it's a lot of it is, I don't plan on selling my business for 10 years. What do I care about what I'm doing with the proceeds? But the reality is there's a lot of things from a wealth standpoint that you need to be aware of to lead up to that. How do you structure your business? What kind of accounting system do you have? All these things that we can help you really get locked in is too late to do if you call us, 6 months before you're looking to, use the liquidity of your business sale. So I would say number one by far is they did not engage a team early enough. The earlier you engage your team, the more opportunity we have to help you get all of these kind of kinks in your plan ironed out. The longer you wait, the less options you have later, which becomes a problem. And you can't put the toothpaste back in the tube at that point. So I think Ruben touched on a lot of the technical things we find, but I would say higher level is people wait too long to talk to wealth managers.
Sure. And I think, like you had said earlier, we live in a super conservative area. I think a lot of people who are looking to invest, a lot of business owners sometimes think that they don't have the right amount of assets, perhaps, to invest, right? Because, quote unquote, you always start at the bottom, you're going to build your way up. At what point in someone's, we'll call it a career or wealth path, does it make sense to kind of level up your advisor as you move up the scale?
I would say it depends. You can tell I'm an advocate for early wealth planning. I think education is the biggest piece of planning early and making sure you're making good educated decisions. So I would say find a wealth advisor you enjoy working with as early as possible. There are firms that have firm minimums of we only take people with $5 million or $10 million. Ruben and I don't operate on that chassis. We can have flexibility on who we're working with. So I would say, making sure you start early. I'm kind of beating this dead horse already of starting early, but I think it's very underrated as to how you do it and find an advisor you can grow with. So it's not just, you don't find a starter advisor to roll into a better advisor. You should be looking for somebody who's going to fit your long-term goal and has familiarity with your situation. So buyers are going to have a different, framework they're working on than sellers. But I think finding an advisory person that you're comfortable with on a personal level and a professional level, and finding somebody that you can grow with. I don't think you really want to be, changing advisors very often. It's not easy. They become a part of your team and your family, so to speak. So it's like you don't really want to be like manipulating or changing that framework very often.
Right. No, makes sense. And just thought I figured I'd ask because, we're going down that path. And I'm going to kind of throw you guys a little bit of a curveball here because of, we've been hammering on the new SBA changes, right? Ben, you'll probably relate to this more than the rest of us. But one of the big things is the change in the seller's note, right? So when we go to sell a business, in a lot of cases now, the banks are coming in and they're requiring a seller's note of, let's say, 5%, no more than 50% of the required equity, right? But let's just say it's 5%. So $1 million, $50,000, that money is going to be on full standby for 10 years at a set interest rate, right? From a wealth advisory perspective, walk us through how you guys include a seller's note into someone's plan. What makes sense about it? What risks are there from a wealth perspective?
I could take it.
Yeah.
Okay. Oh no, go ahead, Ruben. Go for it.
No, I was just going to simply say that, when we talk about financial planning, we want a complete snapshot of our client's financial life, right? And that includes liabilities, right? We're often thinking about like mortgages and, cars and, what's this debt stack, right? Kind of getting back to the age of the typical client that we work with. It's kind of across the board. But when we think about a seller's note, right, we need to think about the client's cash flow really critically, right, on how we work that down. And that's something that we work through on a case by case basis, right? We don't really see a lot of plans with that at the current moment. But like you said, that legislation is changing. So I think as that changes, so do the trends and what we end up planning for.
Yeah. And I think you touched on a good point, Matt, about the risks of it, right? So if they're accepting a seller note, we have to be cognizant of the option that might not be there. So if it does go away and the seller, gets burned on the deal, we have to make sure that we're not earmarking that cash flow for like necessity income or anything like that. It's going to have to be kind of earmarked separately to make sure that we're, positive that the cash will be recuperated depending on the terms.
Yeah, and one other thing I'm thinking about now that we're on the topic, Matt, it's kind of just it's one of the core tenets of financial planning, right? We talked about does your investment allocation sync up to your goals, but it's also kind of a bucketed approach, right? So like Joe said, we're not going to be putting $500 or $1 million cash at risk in the market if we have a liability that we need to pay down, right? So we do think about financial planning from a bucketing perspective too, right? What's your near-term money? What's your intermediate term money? What's your long-term money, right? And how do those get invested in differently? What are the tax implications of all those three? And then as advisors, we wrap our hands around that for the client, help them understand what they have or not, right? Some clients just say, I want to play golf. I'm going to live, wherever I want to live. Yeah, I want to see you for dinner once a year. I want to call you if I have a problem or a question. But we deal with all sorts of things. But like Joe said, we're in the education business, and so for my older clients, I'm very frank. I'm the last advisor you ever have, and for clients that are my age or younger, right? I think about growing with them, and then the stability of what they're going to need when at some point I'm no longer here, and that's why Joe and I work as a tandem, as a team. Over my career, I've worked with a number of different firms with different structures, and I was never able to answer the question, who's going to take care of my family's money if I weren't here, right? And this is a plug for Joe, but Joe is the only guy that's ever answered that question for me from a technical perspective, from a values and a heart perspective, right? So I think picking an advisor is very personal, and it should be. But I think those kind of conversations and that kind of relationship develops over time, and so we encourage people to think about us as more than just numbers kind of place. We're we're not going to tell you to live on a budget, right? We take you where you're at, and then we kind of pick our spots from there.
So guys,
Wonderful.
I have a question that I want to ask, and it more kind of, I think, pertains to the audience that would be listening to this podcast, really from both the seller, broker, and buyer side, right? So as we think about an acquisition loan, right? A couple things, right? You have that stage where Matt and Tom start to talk to someone about a listing, right? And it's at the early stage, right? Really great time to engage you guys, right? Because of the opportunity to start having those conversations on the front end about tax liabilities, how you're going to potentially think about the structure of a deal, right? But let's say they're maybe not working with Matt and Tom who do that at the early stage, right? And all of a sudden you've got a buyer that's well within their deal, and the seller throws the objection of tax liability in there into the deal, right? Because maybe they didn't have their wealth advisor in the deal, right? So how do you kind of work through that if you're late stage in the game, right, versus early stage, right? Why don't you talk about both and how those play out, right? Because they can be the difference between a deal happening and not happening.
Great question, Ben.
Yeah, we can go on the sell side first, I guess. So taxes come up heavily on both sides, I would say. On the sell side, obviously, if you don't work with an advisor up front, get ready for sticker shock and time crunch, right? There's a lot of opportunities for us to divert taxes or help divert taxes. And if you don't work with somebody ahead of time, you maybe don't have as many options as you would have if you would have engaged a wealth advisor earlier. So things, different tax regulations regarding real estate investments, things like that are time sensitive. So you want to make sure that you're engaging your wealth team ahead of time. And I would say on the buy side, taxes come up as well, right? So if you have somebody doing a loan, how are they funding this loan? Like, are they cashing their 401k? Are they borrowing from family? There's a variety of ways that you really have to structure and plan for debt acquisition on, the buyer or the seller. So I think even on the buy side, I would say we see more people sleeping on getting an advisor. They think, hey, I'm going to get a loan, I'm going to run a business. Having an advisor on the buy side is kind of a waste of time. Like, I've heard that argument. I don't need anybody. I'm going to borrow money. I'm going to run a business. I'll call you when I have something to invest. But the reality is that's not necessarily how it works. We can do a lot of good work for buy side to help them say, should you cash your 401k? Are you sure that's a good idea? Like, what does that look like? And also help manage taxes. Obviously, if you're under 59 and a half, and you're blasting retirement assets to fund a business, your banker is going to look at it sideways. So, Matt and Ben are going to be like, what are we doing with this? Are you sure we're doing that? We're cutting huge checks to the IRS, and it could really make you an undesirable buyer from the acquisition standpoint. So I think both sides of the coin need to worry about engaging a wealth advisor for taxes and also for kind of a strategy audit, I'll call it, to say, is this a sound strategy? And am I putting myself in a bad position post sale or pre-buying that I'm not looking down far enough down the pipe to see that it's going to come up?
So let's take those both scenarios, right? And like on sell side and buy side, when do you sit, like, as you guys both being in the marketplace, when do you say, hey, this is when I should be engaged? So like buyer side, right? Maybe they're just entertaining the idea of buying a company, right? But they haven't really gone down the path of talking to a Matt or Tom or even having a conversation with their spouse about the money they're about to take out of the out of the personal financial statement, right, to go buy this business, right? Like, let's go down that scenario, and then let's also go down the scenario of the seller thinking about selling the business, right? And really, when should you guys be brought in? Like, when is too late?
If I could add to that too, as far as on the sell side, how should they kind of think about their post exit, financial runway if they're looking to retire, right? Anything you could add there as well. But start with buy side.
Sure. Yeah, I think, for us, I think unfortunately, I don't think we get introduced to the buy side early enough. Um, I'm thinking of a couple situations, and shout out our friend Squash at David Carvajal, Squash CPA, because he makes it a practice of his to get his buyers introduced to us, just to make sure that the financial plan that the buyer has in their head works out, right? Yeah, you're leaving corporate America. You've saved well. You have a little bit of cushion here if you can't find the business that you want to buy. The family dynamics; those are all going to stay the same. But you're willing to kind of take a risk here and buy a business. Well, I think that it kind of dovetails back into how we think about the plan. So the sooner we engage with that buyer, we've had plenty of people that are disenchanted with the corporate jobs that they are leading, right? And so if you're feeling that, that's probably a good time to talk to us, right? It's not when you're engaged with Matt and Tom and say, okay, send me some listings over, right? But then you should have your personal plan in place. And then on the
You
sales
know,
side, oh, go ahead, Matt.
yeah, sorry. You said something pretty relevant there with buyers. And for the listeners out there, what I would tell you is that if you were to the point where you're submitting a PFS to a broker or to a banker, you're probably at that precipice of time where you should have already talked to you guys, right? Because as you're going up there and we're starting to identify the liquidity that you have in your checking, your savings, your money market, right? Those liquid assets, and we're comparing them against those qualified assets. Are we rolling money over via a Rob's transaction, right? Are we doing some equity transfer? Are we doing something to infuse money into this project? That's probably your limit, right? So I think for those that are out there, right, if you're unhappy with corporate America, your company's looking at exiting, doing massive layoffs or something's happening, you should be months before you're going to make that exit. That's when you need to be talking to your wealth advisor. Is that pretty accurate, guys?
I would completely agree. And I think, let's say you're not in corporate America, you're just an entrepreneur, right? Maybe you have family wealth. You've taught grandma and grandpa or mom and dad to say, hey, I went to school for this. I know a lot about this area. Let me prove myself. We can help you come up with a business plan, right? And so, it scales, I think, the spectrum of who'd be looking to buy a business, hopefully. But yeah, like you said, I think when you get to the point of turning over a PFS, it's probably too late.
I also think it's really important. You touched on something that I think is not done enough, which is talk to your family about your goals. Like if you're getting to the point where you're, going to a banker and providing bank things, if your family doesn't know or your spouse doesn't know, you're probably too late on that side. So I would say we've had the best success with, doing family meetings. Like I've met with people wanting to start a business that has their spouse there that wants to hear the details. A lot of times the family is kind of kept in the dark too late. And then it's like, wait, how does this loan work? We're on the hook for it. Like now I'm starting to feel uncomfortable about our personal financial situation. And if we can help alleviate some of that stress, I think it's better for everybody involved in the deal. So it helps, Matt, Tom, and Ben get the better information. We can help facilitate that conversation and get you more quality borrowers, but also like your family has to be on board with it. Your spouse should be aware of it, and you will do yourself a solid by having them agree and see the plan. Families will be more apt to be supportive of the idea if they know that they're not financially risking their safety to do it.
Right. Now that makes sense. So if we switch back before I so rudely interrupted you, Ruben, here to sell side, right? When is that precipice for you guys?
Yeah, I think Joe and I would probably have the same answer in 3 to 5 years. Because we do see it as a succession, right? Kind of event, and whether that's internally to family members, or if it's an outright sale, right? Do you have the legal entities in place? Depending on the valuation of the business, to accomplish the goals that you want to, right? Is this liquidity event one that's going to create generational wealth for you and your family, right? And so in a lot of cases, we end up thinking about that pretty heavily. We touched on tax consequences, right? Just what's the capital gain of the business, right? What's it worth? What's it going to sell for? What are the taxes going to be due upon incurring that gain? What strategies can we introduce to help mitigate taxes? How can we do the planning in that way? So not number of different things that we think about primarily on the sell side. And in those cases, I think 3 to 5 is a great idea, but we also get opportunities with sellers that maybe aren't as forward thinking, right? And someone gets sick, there's no one else in the business. I know it's worth $2 million. I go to talk to Matt. Sorry, it's worth 1. Well, I'm not going to sell. Well, what are you going to do, right? We oftentimes can help sellers get off the bench or just better understand that $1 million is a lot of money, right? I know you had 2 in your head, but valuations being what they are, it didn't work out. Let us help you understand your cash flow. Let us help you understand your living expenses. Let us help you take what it was worth and live off of that, right? And understand Social Security and Medicare and all those other dynamics that come into play, past pensions, whatever. So yeah, it's probably maybe an all too brief kind of overview. But Joe, anything to add there?
Yeah, I know this is going to shock you all, but I would say the earlier the better. I'm a broken record on this, but there is a lot of stuff that will come up during your exit process that you never imagined being part of it. So yes, 3 to 5 is a good rule of thumb. That's what a lot of people will tell you. But I always say, like, if you're selling you own a home, you're going to eventually likely sell it. Like, do you just wait till 1 month before to paint the baseboards white so everybody thinks it's a great house, or do you maintain it? And I think what I really try to, instill in a lot of the clients and business owners I work with is exit planning is good business planning. It's not you do business planning, then you do exit planning. They go together. They should not be broken apart. And there's 3 phases of it. So there's the personal part, the financial part, and then the business part. It's a 3-legged stool. You need to have all 3 legs to have a solid financial plan. And they go at different stages. A lot of our business owners were at the personal phase of making sure exiting is what they want to do and making sure they're aware of their exit options. The next thing you want to do is make sure the proceeds are enough to cover their lifestyle. So if they say, I need 10 million, well, you're going to get 2 million. We have a problem. We can help say, okay, we've identified this early enough. Now we have opportunity with your team to try to grow your multiple and kind of close that valuation gap to get you at least closer to your goal. And then I'd say the big part is a lot of people say, oh, I'm just going to sell to private equity. It's like, based on what? Why are you saying that? It's like, well, my friend at the club said he sold to private equity. He got a 10X. So I'm going to get a 10X. The reality is, I would say 70% of business owners don't actually know the value of their business or where they're going to sell it. So it's like you have these ideas in your mind, then they'll meet with a qualified team that we help you build. And they'll be like, wait, you shouldn't do private equity. You should do this. Or a buyer appears out of nowhere. That's a strategic buyer. Or, your son who's never been interested in the business says all of a sudden comes back and says, I'd love to be part of the family business. How do I do this? Whatever. So I think the longer you have the relationship going, the more opportunity you have to keep the ship on track and build the team around you. I think a lot of people, and I'm sure Matt, Tom, and Ben can speak to this, you have a team in place. That team will change over time. You're going to need a lawyer. You're going to need a different accountant. You might need different other people from your team that, have guided you along the way, and you're thankful they've done that. But come deal time, you might have to have a lot of people involved that are going to take some time to get into place and for you to be comfortable working with them. So I know it's like kind of my joke. You should be doing like exit planning the second you buy your business. But when you start looking at like all the moving parts, exit planning is good business planning, in my opinion.
Yeah, I get what you're saying. We do provide more of a customized approach, right? Not only to how we plan, but also to how we invest, right? And like I think we maybe alluded to, we're in the education business, right? So we like talking about this stuff, regardless if you have $5 or $5 million, right? Now we have resources that are geared towards people that have, say $1 million and up, right? But there's plenty of people that consult us with $100,000 that's in a 401k, right? For example, or business owner that's just getting started, right? I think about this afternoon. I'm going to go see a drywall business client of mine, right? They just started. And so you can use your imagination on what the dollars and cents are, right? But they were introduced to me at a previous firm and believed in my style and believed in me. And, that relationship is carried through, right? So in their case, I think maybe just good luck that they got introduced to somebody. But as far as like being proactive and kind of finding an advisor, the world's kind of full of them, right? It's like there's a lot of attorneys out there too. I think you got to do your due diligence, right? If you're a buyer and you're just buying the first business you see, you didn't do any due diligence, right? And so, I think being around somebody, understanding their values, but also being able to have a conversation about, well, what are the technical aspects that your firm can provide me that maybe a bank or somewhere else that my mom or dad are at can't, right? We should be able to have that conversation in a really level-headed kind of way, because yes, we're competing with other firms for those same dollars, but we'd like to think at the end of the day we're the right people, we're the right blend of people and brains, right, to get people where they need to be. So yeah, the stages in life. I mean, we've had 92-year-olds on board, and we have conversations about, hey, my newborn needs a college account, right? And so we're doing some college planning. It really is cradle to the grave, and I think if anything, we were able to give historical perspective on where we are, what life is like, what we're going through, and just kind of coach clients on staying the course or just thinking about a decision differently.
If I could add something, I think there's a lot of terrible financial advice out there, if you just go to YouTube, Twitter, wherever, right? But at the end of the day, I think most people know, similar to eating a healthy diet or exercising, right? It's like, it's doing the small things on a daily basis, or having somebody that knows what they're talking about that can guide you in your personal journey through the process. And I think a lot of people bury their head in the sand because they might have a SEP, they might have a 401k, they might have all these things just kind of floating out there and not really put that time in to figure out, hey, how is this best serving me, right? And it can be a mental hurdle for a lot of folks to even approach Ruben or Joe or somebody else, right? Because there is so much crap out there to know, am I going to be safe doing this? Are these the right people? And one thing I would say, knowing the two of you guys and Strategic Wealth Partners, you make it very easy for people to come in and kind of just emotionally get around their head around, hey, like, these guys know what they're doing. They can take me from A to Z. And if they don't, they're not going to force me into a certain product or whatever. They're going to advise me to make the right decision, either introduce me to somebody else that I need at this time, or stage of life, right, that they can't handle. And, or they'll be able to, build up to that point where, if it's 3 to 5 years, pre-exit, at least you're guiding them to that point. And then potentially down the line, hey, M&A attorney, like you said, right? So I think you guys do a great job of that. Could you touch on some of those aspects as far as somebody coming in that doesn't have their financial plan in place? Maybe they're fairly successful as a business owner, but they're just wary as far as who they work with and who their money's with.
Yeah.
Tom. Oh, go ahead, Joe.
No, Tom, you're speaking our language. You're hired, to give our pitch anytime. We come across that often. Everybody thinks, like people with a lot of money have all of their stuff together and they're going to come to you with a really smart strategy they've been following. The reality is that is pretty far and few between. I would say we see the opposite of that more frequently. And really what we are, and like, yes, wealth advisors, I always say I'm a client advocate and a business owner advocate. What I'm trying to do is educate them on what they have. So I think if you don't know where you are, I don't know how you know where you're going to go. So really our initial approach is hear their story. What are they looking to do? Why are they approaching a wealth advisor? I always lead with that question. What made you reach out to me? It's not, hi, nice to meet you. Here's an investment you should have. And how much money do you have to put in it? I think that's completely backwards. I really want to hear their story, see what they have and help them organize it. You'd be amazed. A lot of clients have never built a net worth statement. So they have all these assets. They've never put it on a single piece of paper until Ben or Matt's like, hey, give me a personal financial statement. They're like, well, let me go in Excel, A1, start typing numbers in, right? So I think getting them on track to even start is really a stepping stone. We start with a net worth statement, we start gathering, and then it's, what are you trying to get out of this? Not everybody's goal is to maximize their money and go retire on a boat in Florida. We have clients who say, I want to give back. I want to make sure my employees are taken care of. So I think hearing their story without judgment is really what we're trying to do. I always tell clients first meeting, I'm not going to budget you and I'm not going to scold you. If you go to Starbucks every single day and you're spending 12 grand a year on Starbucks, you make the money, you spend the money. I might point out like, hey, that's probably not the best idea. And you probably could save a few bucks here and there, but we're not here to tell you what to do. So I think our approach is trying to be very approachable and non-judgmental. And I always say like the money's the tool. I think a lot of the other advice that comes along with it is what builds the picture. You got, your pieces of the puzzle, you got your financial plan, you got your estate plan, you got your tax planning. We're here to help put it all together. We're not here to criticize, judge, and give you what we think is the only option, because there's 100 ways to get from A to B that's going to achieve the client's goals. So you just need somebody who's going to be willing to, take that journey with you and give you unbiased result or advice to help them achieve whatever they're trying to do. For example, I have a client that's goal is to die with $0. My joke to him is always, let me know when you're going to die and I'll make sure that's happening. But it's, there's people who are like, I made the money, I want to spend it. And this person has, north of $10 million. So it's not like, they got a few bucks burning a hole in their pocket. It's like, there's a different strategy, and you have to goes back to what Ruben and everybody has said, which is you have to be comfortable with who you're working with and have an advocate on your side, not just a wealth manager. It's not just us giving investment advice. It's the journey along the whole way and how to do that correctly.
Ruben, you said something earlier that I wrote down here, and I was hoping we could touch back on it. But you had mentioned Medicaid, which immediately spins my head into the insurance conversation, right? Because as a buyer, you're leaving corporate America. You're leaving health insurance, dental, vision, disability, short and long term. And you're buying a company, right? And you're buying a company that maybe doesn't have health insurance benefits. There's that. And then you're the seller. Now you're exiting and you maybe are losing all of those preferred benefits, right? So I think that insurance conversation is a must have. So I'll leave that to you guys.
Yeah, and insurance in any shape or form, right, is kind of important to all people. I think the Medicare and health insurance piece of the conversation is very different than when we think about life insurance, right? And kind of back to the point that our approach is based off of where we've been. So I don't like to be sold to, right? So I don't sell anything. I just try to be who I am, and I try to say that I have an expertise and a team that understands these financial needs. But when we talk about insurance on that side of things, there's a general education, and then there's an expertise, right? And so oftentimes, and I've done this throughout my career where, we have health insurance specialists that we partner with, right? I did it with my mom, right? She just retired a year and a half ago. Medicare Advantage plan versus a supplement, right? All those kind of things, right? So, we know the workings of it, but when we need to get technical and say, okay, what prescription drugs are you on, right? What are those costs, right? We will bring in the experts in those situations to get clients the solutions that they need. So, and just really quick on that point, right? I mean, Joe and I have both been on what you would deem a dependent firm. We are at an independent firm, right? And the independence piece is incredibly important to both of us, right? That there is no conflict of interest with what we're recommending getting in the way of our payday, right, or our paycheck. So when you hear RIA and you think, well, what's an independent firm versus a brokerage firm or a bank, right? Think of that as the main difference, right? We are, like Joe said, client advocates, right? We're trying to sit on the same side of the table as you. This isn't adversarial, right? We're not across the table, beating you down from the bully pulpit. We're on the same side of the table with you. Sometimes the conversations aren't great, right? But that's how it goes with family, right? Sometimes you have a great interactions, but sometimes, when you get called to the carpet, you get called to the carpet. And so, I think that's an incredibly important call out as well.
I think that we'll call it the wealth management planning aspect of 3 to 5 years aligns very well with, our maximization of your exit strategy, which is typically 2 to 5 years, right? So one of the things that we do as brokers, when we're introduced to a sell side client, they're looking to exit, 2 to 5 years, 3 to 5 years down the road, we're looking at financial performance. We want to look at the last 3 years of their tax returns, their P&Ls, their balance sheets, and we want to help kind of structure that conversation, moving forward. And so when you're talking about lifestyle, personal business, how can a seller come to you? And you had mentioned earlier, you're going to partner with a bunch of people, but you're going to look at that whole picture. Are you looking at sell side documents as well? Or walk us through what is the business relationship for sellers look like?
Yeah, so our business relationship on that side would be partnering with the client's other advocates, right? So we're not trying to hijack the conversation and say, I'm the captain now, everybody else works for us. And you'll hear a lot of people talking about quarterbacking. I don't look at it as a quarterback. It's more like, think of offensive, defensive coach, something like that. It's like, we're here to help. So I would say the main thing we're really interested in is just making sure the client is getting the best advice from the best person in that seat. So we're not trying to look at the documents. I mean, Matt, if a client asks us, what do you think of this deal? If we have valid input to give them, we'll give it to them, but we're not the experts. That's where, you and Tom and Ben all come into play. So I think staying in your lane is really important, but I think having an advisor who understands that structure and hierarchy is even better. I think being a certified exit planning advisor has really helped me keep clients in the right spot where they will say, okay, when I have this question, I talk to Matt. When I have this question, I talk to Tom or Ben. And really teaches them who is doing what and alleviates a lot of the conflicting information. I would say if you don't have the right team in place, I've seen conflicting information come up where a wealth manager tries to be like, no, you should try to get this. And then they go to the banker and the banker's like, no. Ben's having conversations like, no, this is totally TikTok bad information. You shouldn't be trying to do this. And then you get into kind of a tug of war with, your team, which isn't productive for the overall goal. So I think that's really important, is having the experts and us helping build the team, but we don't have to run every aspect of the discussion.
No, and that makes sense. And one of the reasons I'm asking that is, Tom and I deal with sellers all the time who have a team, right? And there's an advisor, there's a CPA, there's a lawyer, there's, a banker, and none of them are saying the exact same thing, right? No one's on the same pathway. One's running east, one's running west, one's running, north and south. And I think in a lot of cases, as you, as the business owner, start to get closer to your exit plan, pulling your team together so everyone has one universal vision and checks and balances are in place, I think is one way to maximize that strategy, right? So guys, we got about a few minutes left here. I guess wrap this up for us in a nutshell, right? I mean, obviously planning early, being active listeners, right? Asking people level 2, level 3 lifestyle questions is really important. And obviously, you guys are super well qualified. But wrap this up for our listeners in regards to wealth management for both buyers and sellers.
I think if we're thinking about wealth management for buyers and sellers, there's a good chance you probably have $1 or $2 in the bank. And Joe says this all the time. If it has $1 inside in front of it, we want to talk to you, right? We want to have an opinion or at least give some advice on that. So you don't have to go it alone, right? And if you're the kind of person that's worried about what's this going to cost me, you have the conversation before you put that horse before the cart, right? Because I'd rather measure twice and cut once, right? So I put a new roof on the house, right? I get 6 or 7 different quotes, right? I'm just go with the first person. But hopefully if whoever's out there listening and they're alone, right, and maybe they just have an accountant and somebody that helps them with the books, ask the question, right? Raise your hand. The squeaky wheel gets the oil, and so just know that from our perspective and what we're looking to do is we're helping you achieve understanding of your situation. And then if you want to engage us in a service furthermore, we can talk about that as well. But we want people to be educated. We want people to make appropriate decisions. We don't want to hear, the worst case is, we're brought into a mess, right? And, if you just would have done this, right? That doesn't do you any good at that point. And so I think, we've touched on the size of our team, the scale, the scope. But more than anything, if it has $1 inside in front of it, I think you should ask, and I think we're a decent team to ask.
I think it's important to build a team around you. Everybody thinks they're looking for the one person who's going to give them the advice and they get their answer. The reality is that's not how it works. Nobody can be an expert at everything. So build a team of people that you trust and are advocating for you. So get comfortable. Just like Tom said earlier, don't stick your head in the sand. Like if you have something that's coming up that you're stressed about financially, engage in experts. There's a lot of times the people on this podcast can help you fix it very easily, and it's probably something you shouldn't even be worried about in the first place. If it is, then you have the right people now looking at it to help you correct it. So I would say I'm a big believer in team approach and starting early. I know it's been beat to death, but I think also the other things that are really important is don't forget about a lot of the other things that come into play, which is taxes. I didn't go down my tax rabbit hole. If you ever talk to me, you're going to realize I'm a big tax nerd. So taxes is a huge thing you want to pay attention to, and you need somebody really awake at the wheel on that one. And the legal side, I'm shouting out the lawyers here. There's a lot of people who do some really loose legal stuff, or they don't really think about it until it's like, oh, yeah, that should have been something I looked at a long time ago. That's not just business owner specific. That is family wealth planning. If you have kids, if you have, a lot of wealth, you need a very strong legal structure in place. So you want to make sure you're kind of looking at the whole triangle of everything. Wealth management is a piece of it, but a good wealth advisor should help navigate those discussions. So approach one, ask. Ruben and I will gladly talk to anybody for free. I'm putting them out there for free right now. Questions, give us a call. You are not always on the clock. I have a lot of clients who are like, I don't want to pay somebody when I don't know what I'm asking. Ask us. We'll gladly do it for free. Give us a call, shoot us an email, and engage the process. And I assure you, a good wealth manager will pay for their fees multiples over every year by the advice and taxes they're saving you. So engage somebody and start working with a team.
Make sure they're subscribers first before,
Yes.
But thanks, guys. We really appreciate the conversation. Really insightful. appreciate the sponsorship as well. Maybe we'll have you back on at some point. I don't see why not. I think we could keep going, for another hour if we really wanted. So thanks, guys.
Yeah, thanks for the great questions and just the invitation to be part of something that's pretty unique for us at least, and maybe this is our viral moment.
Yeah, thanks for having us. And the amount of information you guys give out for free is insane. I try to pass along the podcast as much as I can because it's like every question that you can come up with has been addressed in some capacity. So big believer in the data you guys are pushing out.
I'm going to clip that and post that just so you know.
Do it. Yeah.
Matt, when you do the 10-second blurbs, right, for the podcast, take that one right there.
Yep,
Do it.
exactly.
I'm going to advocate. Go for it.
That is
Thanks,
that is
guys.
amazing, guys. Thanks so much for taking the time out of your day today, providing our listeners comprehensive knowledge in regards to wealth management and financial planning. It really is. I mean, everybody here has been doing this a very long time, and I think the number one consensus is you have to start early. You have to consistently plan, and you can't put it on the wayside, right? You got to bring it front and center all of the time. So that's absolutely huge. So as we're wrapping up the podcast, next month, guys, is legal. Why? And what goes into this, right? Whether you're dealing with a transaction that's $100,000 or $100 million, you have to have legal representation. And I know, Ben, this is a big point for you, but we're going to focus in on the LOI, the APA, a stock purchase agreement, member transfer. We're going to cover the whole basis with a lawyer here. And so next month, really excited about that. Guys, podcast this month will be on Spotify and YouTube. Like, comment, subscribe. All of Ruben and Joe's contact information will be in the comments below. So as always, thanks for being a listener, and we'll talk with you next month.
Strategic Wealth Partners, SWP, is D/B/of, and investment advisory services are offered through Kovitz Investment Group Partners, LLC, Kovitz, an investment advisor registered with the United States Securities and Exchange Commission, SEC. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability. The opinions and views expressed are as of the date published and are subject to change without notice. Information presented herein is for discussion and illustrative purposes only and should not be used or construed as financial, legal, or tax advice, and is not a recommendation or an offer or solicitation to buy, sell, or hold any security, investment strategy, or market sector. Opinions and examples are meant as an illustration of broader themes, are not an indication of trading intent, and are subject to change at any time due to changes in the market or economic conditions. The information included herein may contain statements related to future events or developments that may constitute forward-looking statements. These statements may be in the form of financial projections and may be identified by words such as expectation, anticipate, could, estimate, will, should, or similar terms. Such statements are based on the current expectations and certain assumptions of the author and are, therefore, subject to certain risks and uncertainties. The description of products, services, and performance results of Kovitz contained herein is not an offering or a solicitation of any kind. Past performance is not an indication of future results. Securities investments are subject to risk and may lose value.